All right, good morning and welcome to the study for test 2 Camtasia lecture. Um, some students have told me the slides work well enough. Camtasia is not needed, and that's great if the slides work for you. Others have said Camtasia is helpful. We've been working on the mode of delivery for these Camtasia videos, and all else equal, it seems like YouTube is the winning format. As we talked about in class, there are time constraints on YouTube, so this video is not very long. Kind of a meaningless conflict of interest. YouTube is owned by Google. I am a registered Google shareholder, but believe me, I'm making no money off of any of these slides, videos, and I only own one share of Google. Anyways, here's a serious pedagogic note. Try the bonus problem that is on Blackboard before proceeding with these slides, this video. So stop now if you've not looked at the bonus problem. It really is true that your best gauge of how well you're going to do is to just get a problem that could be like an exam problem and see how you do. Can you do the problem quickly with the material that you bring into the exam? All right. Here's some housekeeping notes. There is a Blackboard reorganization. All files from the course were moved to this folder. It's easier if I show you what I'm talking about. Let's look at Blackboard. All right, this is how it looks right now. So everything prior to last night is now in this folder, and here are some new files with the exception group 2 problems they weren't moved because we'll talk about them a little bit in this short lecture. All right. Okay, so look at the bonus problem that's on Blackboard, and what we're going to do now is talk about how to get ready for the exam. We'll call this class for the day, even though it's Friday. Regardless of whenever you watch it, it's an attempt to get you ready for the second test. All right, so here's our agenda. We're going to talk about how you might prepare for the exam, some things to know that we did talk about during class. We'll review the group problems that we discussed during class, whether you take class on Tuesday or Thursday. Time permitting, we'll talk about section 3 of the course, which is international tax, just a real quick overview. And also time permitting, we'll talk about grading. All right, so let's start with discussing the exam. All right, here are some things from class. These are helpful ground rules. All right, so we got lots of different answers on the group problem set due to making different assumptions. One of the assumptions is the tax exempt rate that you'd use, the rate you find from the IRS website. For the exam, we're just going to go with 5%, and that'll be stated on the exam. Also, differences in answers have happened because we have chosen different corporate tax rates. In many cases, the rates you chose are more technically correct than sticking with a simple 35% rate. But for the exam, we're going to stick with a simple 35% rate. Next up, we get different answers if we choose different costs of capital. We'll see this illustrated in a second. But when you're looking for the present value of an NOL, its economic value, you need to do an annuity problem, and you need cost of capital. Becomes important what interest rate you put into your model. For the exam, you will get a copy of a present value of an annuity table. If you want, you can use your calculator rather than a table. And on the exam, I will distinguish more clearly between an NOL carryover and the deferred tax asset that is generated from the NOL carryover. All right. All that is done in an attempt to kind of simplify things and speed up grading. I think it will help a lot if there are some common assumptions that we all are using. All right, so agenda. In terms of preparing for the second exam, you want to be very comfortable with the material on the face of Blackboard and somewhat familiar with the material after you click through the first folder. All right, so let's look at what that means. All right, to me, this is the material on the face of Blackboard. Right? These 5 files, plus there will be a internet link to this video, probably show up here. The second part, material that you should be loosely familiar with, click through one link, and we're talking about these files. All right, so everything else was kind of prior to what we're doing right now. So that's what to focus on. All right, let's pick back up and review the group problems for the week. One of the problems, very sort of straightforward loss limitation problem. Everyone seems comfortable with the basics of loss limitations. The bonus problem adds some requested bells and whistles, right? So here are some of the requested bells and whistles, some allocations of partial ownership, which you'll see in the bonus problem, and also some tiered relationships. You'll see some simple examples in the bonus problems. All right, but turning back to the problems that we worked during class, question 1, part 1, we first looked at why that tax exempt rate is important. If you look in that little picture, we used the 5% assumption. On problem 1, the consideration given was $13 million for the BAP company, creating an annual NOL limit of $650,000. During class, we stuck with a simplifying assumption of 35%. That gave you potential economic value per year of $227,500 for this NOL, and that had an 18-year life. So that number that you're looking at in the middle there, 10.828, that came straight off a present value table where N equals 18 years and I we selected as 6%. Again, that's a cost of capital. You could reasonably select many different numbers, but the present value of the NOL tax shield, right? The economic thing you should be thinking about when making this deal is that tax shield's worth $2.4 million, a little bit over that. All right. What else did we look at? We look at charitable deductions and capital loss carryovers in this problem. And the big point is they both operate in a very similar fashion to NOLs, right? The couple small differences are pointed out in some of the files that are printed already, but they operate in a very similar way where you can carry back, carry forward. I might have some more on that in a second. Here are the remaining questions to number 1 from the group problem set. So the end of the story is, should the company impair its NOL? Yes. In fact, they should have impaired the NOL before 2010. The key concept here is that the annual NOL limits work in a use it or lose it fashion, and that is what's different between NOL, carry back, carry forwards, and charitable deductions and the gain loss stories, right? There are not hard annual limits on the charitable deductions and the gain loss carryovers, but there are on the NOLs, and that comes into play for the final question. So the next to last question asks, what are the journal entries? Here you debit impairment loss and credit deferred tax asset. Those are things that show up on your balance sheet. Tracking the NOL itself is not a balance sheet item. The actual asset is the deferred tax asset. And then finally, the question asks, what's the NOL carryover into 2011? So when you think back to that problem, you got a story about the corporate formation happening in 2006, and then you got 4 years of data, things that were recorded. You could count kind of back or forward. You could start from the position that immediately after Skyline acquired BAP, you needed to impair the NOL. With our assumptions, the impairment brought the NOL down to 11.7 million. You could count up all the foregone NOLs. All that's a real complicated way to get at what you can do by just looking at how many years are remaining on the life of this NOL. In this example, it's 14 more years. Each of those years has a $650,000 cap associated with it. All right. The second problem was cat, mouse, rat. All right, and an overly simple problem, or like heavily skewed problem towards the consolidated return. Right? Lots of advantages to the consolidated return. One, you'll defer the gain that cat has on selling inventory to, I think it's rat. And two, you won't have that dividend income from rat. And three, you can use mouse's loss if you consolidate. Right? So you get all those benefits from consolidation. The bonus problem will make things more interesting. All right, so when you look at the bonus problem, one thing that it does that the original group problems probably didn't do enough of is it addresses the second major topic from this part of the course, and that is basis adjustment. So when you look at the bonus problem, keep these basic rules in mind about basis adjustment, right? Like why you'll change basis. Most people don't seem to have a problem with the rules. Here's an issue that maybe to ease your mind about the test, we're going to put in the beyond the scope of this class. Any exceptions and details beyond basics, they're beyond the scope of what we're doing. All right, so all that discussion, don't worry about it. All right, and also we're going to defer until the final exam this topic, the excess loss account. All right, so we're not going to explicitly be seeing negative basis on this exam, which seems like a good idea for the time being. We'll pick that up later when we have a better understanding of everything that's going on. Now that said, here's an item that is fair game for the test. All right, we talked about the tax adjustment that happens when a parent pays the whole corporate tax. All right, so they're paying money to the IRS, but really some of that money they pay is on behalf of subs. Right? And when the parent makes the payment to the IRS, that changes the parent's basis in the sub. All right, so think about that. Just think through the basis adjustment rules if you see a problem like that. And that's it. All right, so be ready for those things. Not looking to add any other types of new detail. That is the test 2 story of how to get ready. Most of it, excuse me, deals with the problems that are posted on Blackboard. So definitely check out Blackboard, and I will see you all next week at some point.